Blitz, ballroom blitz. All right. Surprise podcast. I'm going to go through all those XAU gold versus different currencies, and then silver versus different currencies with 10 of them, including the USD. This is what got me hooked or on the precious metals. I think back in the 2018 when I saw that gold was starting to break out or approaching breakouts in XAU versus the Australian dollar. And I said, whoa, what's happening here? Always been looking at USD denominated assets or CND, Canadians. But when you look at the other fiats, it kind of gave me a clue that something was really happening. So right now I'm going to do a fast recap. Here's my setup. Monthly candle chart, 12-month moving average. Here I have a distance from 12-month moving average in the histogram. And we'll see, you see when it pulls back here to these levels here, that's as close as it wants to go before bouncing back up. So you see clearly here. So if we're this far away, let's say 11% away from the 12-month moving average, we're kind of no man's land, right? Here we had a high water mark, and then had to pull back, then up. So right now it could either continue up and distance the price action from the 12-month moving average, or it could move sideways and with time let that 12-month moving average catch up, or correct rapidly and go touch that 12-month moving average in a faster manner. Those three possible ways of letting that 12-month moving average catch up, guys. And I have my super duper volume profiling right here, just to give you a visual of the importance of the base of the transacted volume and how when we slid up, we had a vacuum. And right here, see, look at that, there's smaller volume nodes, but what price action is right above. So that's going to try to give us an indication of if the price action wants to go back within that volume defined now, which is support. So the price action, will it go back down towards the 12-month average, or it's just going to keep squeezing up where there's almost no more volume defined resistance, and we're actually going to decide to go up and spike up, guys. So I pretty much did it. Here it is for the XAU USD. Let's look for XAU versus Singapore dollar. Like, it's pretty extended from its 12-month moving average. Low watermark was 6%, high watermark 16%. And see when it went high, market says, you have to consolidate. So nice correction all the way to the 12-month average, 6% away, and then exploded up. Nice base, just like we had with the XAU USD here, creating some volume the longer you spend in that region here, which was also some volume from that previous top. And once you're out, look, it vacuumed up. And that's what I'm expecting for the US dollar. This type of scenario, once we're out of our zone here, don't focus too much on those all-time highs. Focus on the volume-defined price action. And once you're up, look, it just vacuumed away. And right now it's starting to create some volume nodes as it's deciding, am I going to squeeze up or consolidate at these levels? And slowly, as time moves on, that 12-month average is going to catch up. XAU New Zealand dollar, look at that huge base, a volume-defined huge base. And I think it's ready to prime. New Zealand dollar and the Australian dollar were the first ones. I think also of the Canadian dollar that were breaking out versus gold. And it's had its stretch. And while the US dollar was now is weakening versus the gold, the New Zealand dollar, it's almost back at that pullback right here, 8% away from that 12-month average. So I think it's pretty much primed to go another leg up, guys. And then we're going to see it go up. Japanese dollar still pretty extended, so it's still in its push phase above the smallest of the volume nodes that it has up here. Look at that crazy base. So right now, pretty much in no man's land. We'll continue upwards or pull back to a little closer to this 6% away from that 12-month average. Great British Pound, look at that. Extend, come back, extend, and now it seems to be decreasing. So probably going to halt a little bit until it comes back to 4 or 5% away from the 12-month average. Nice base here, volume defined base. Another crazy nice volume defined base here. And you see the price action vacuum up here, low volume, and starting to create some all the way up here. So GPD probably gonna sideways move from here until 12-month moving average catches up for another leg up. Euro up, pulls back, never gets closer than 8% right here. See, explodes up, 7%, explodes up, and almost back at 7%. So this could stall a little bit, either maybe go down a little bit, close the month a little lower, or a little closer to that incline 12-month moving average for another leg up, guys. Same pattern here, volume profiling, defining that base. Gold versus Swiss franc, same thing. Explode away. Oh, get too far away. You see, you could even draw, I used to draw resistance lines on how far the price action could get away from that 12-month moving average. And right here, getting close to those tops, those previously defined highs, that distance. Consolidation, multi-month consolidation, explode, consolidation. See, likes going down to 4 to 5, 5.5, 4.7% away. That's pretty much how the Swiss francs likes to react. Explode up and starting to slow back down. So that's another one that's probably gonna sideways move for a little bit until that 12-month moving average catches up. And XAU, Canadian dollars, same thing. Explode, hitting resistance defined by the distance from the 12-month moving average. Pull back, explode, letting that 12-month moving average catch up. So we could probably expect the moving average catch up 6%, close the gap 6% away from that 12-month moving average. And remember, it could happen either on a correction to heal faster that move up, or time. It's just a price action, just fluctuates, stays here, creates some more volume, defined fair value playground right there, and then slowly when the 12-month moving average catches up, a new decision is taken by the market, continuation upwards. XAU versus Australian dollar, the OG, the first one that broke out, was so clear. Crazy nice base here. More basing action right here. That's this takeoff pattern. Coiling close to that 12-month moving average and then exploding away. So 7% away, 7% away here. This is the number I'm looking out here, guys. When I highlight it here, 7% away from that 12-month moving average. And it looks, as a leader, it extended away and then it started stalling. And right now, back away, 7% away. So I think that the gold versus the Australian dollar might have another leg up very soon, a continuation from right here, close to 12-month moving average, and up and away. USD. All right, now we're in the silver, guys. Get really interesting right here. Silver, in most of these currencies, you'll see the setup is really, really, really tight. USD dollar, could draw a trend line here, coiling the distance away from the 12-month average. Most of the price action silver, you'll see, it'll be sideways move. So it's time, it's correcting over time. And what happens over time is the 12-month average catches up, and eventually it's going to squeeze up, guys. Nice base. We're right above this nice base right here, but we also know that we have some resistance right here. Versus Singapore dollar, pretty much like the USD one. Right here, you see coiling action and less overhead resistance than on the USD dollar. We're right above that base, like a wedge, squeezing the price upwards. Versus the New Zealand dollar, same thing. Very, very clear cut contraction just above an inclining 12-month moving average. Look at that nice base. And right here, it's really at fair value. So it's going to either get squeezed down, break down below 12-month moving average, or squeeze up and break out above this multi-year base right here. And if you look at the rest of the complex as a weight of evidence, you have to favor that it's going to get squeezed up once it hits here when there's max fear and you think it's going to break down. That's why I'm favoring looking upwards, because this type of pattern is a nice base with higher lows, and just the whole weight of evidence is angling towards a breakout versus a break down. Versus the Japanese yen, silver, look at that nice coiling, tight action. Really, look at that resistance right here getting tested months over months. Look at that, all that attracting all those buyers and sellers, lots of volume, just like a knife wanting to cut that and letting it slide down the hill all the way up here. The other scenario slides down, but remember, 12-month moving average is angling upwards. The rest of the complex supporting that, it's going to go up. Really close to a decision time for silver, guys. Versus Hong Kong dollar, pretty much like the USD. I think they're pegged to the US dollar, the Hong Kong dollar, tight. Same type of volume. If it breaks, if it goes down, it's already sliding down. See, we're right about here. So this wedge right here is already pushing it down. So there's kind of a small vacuum, should bring it all the way up here until we hit some volume defined resistance right here. And after that, off it goes. Versus Great British Pound. Same type of coiling action right here, 12-month moving average. And look, the base is even lower right here. So you get some clues, right? Even less resistance right here than we see on the other pair. So once it starts rolling down and closing, here's the last volume node. We're right below that last volume node. And look at that vacuum right here. Whew, all the way back here to these, the beginning of the breakdown from that top pattern that started the bear market. And this is about, I think, where silver is at 27, 29. This is probably the equivalent for silver versus a Great British Pound. Versus a euro, they're all the same, guys, all the same. It's like a confluence. When I see that, this type of synergy, that all the levers, sometimes the stocks, they advance at different speeds in the precious metals complex. But when they all start syncing up and they're all ready to go, all heading to their closer 12-month moving average, it's really signaling me that it's imminent that a move is going to happen. Silver versus the euro, nice base, already started to slide down right here. Whoa. See, I'm highlighting just the peak right here, and then I'm looking where the price action is, and it's right above it. So just getting a little squeeze up, should be able to go test those 2016 highs. And again, look, another one that has a vacuum right here. Once we're past those 2016 highs, the next target is this resistance, previous support, turn resistance, what I call a wall. Silver versus the Swiss franc. You see the pattern, guys? I'm repeating myself. Coiling price action above, very tight, close to that 12-month moving average. Just like here when you were scared. Oh, squeeze up, move up. Here is a lot, it has a lot more. So the base right here is a little stronger, the volume for the silver versus the franc. But once it gets down here, if it could just pop a little bit more here, it could start sliding down and starting to hit those 2016 high, that volume node, and all the way back here. So you got to remember also for the Swiss franc, in the precious bulls market, like a North Star outlined, it will act as gold. So it's like a currency that people like to take refuge to. So silver will not perform as strongly versus the Swiss franc as it will versus a currency that's depreciating like the DXY or another risk on currency. So this one's going to be a little tighter. Yes, silver will eventually outperform the Swiss franc, just like gold will outperform the Swiss franc. But you see on this chart pattern, it's a little going to be a little harder, a little stiffer competition there to be able to rock it up to those 2013 breakdown levels. All right, guys, two more. Canadian dollars. Oh, Canada. Coiling action, 12-month average. And this one's more clear cut. Nice base. We're really above it right here. Last volume node right here. That's important. We're above it. And for me, Canadian dollar clear cut case, we should be getting that, hitting those 2016 high, just a little bit of volume node right here. And after that, we should be going up to those 2013 breakdown levels a lot easier. So the Canadian dollar, the New Zealand dollar, the Australian dollar could be taking a hit versus these commodity versus silver and gold. Australian dollar coiling, look at that. What a setup. Close to that 12-month moving average. That base is right below us. And right here, we've been staying a long time at this price action. We have a smaller volume node. Another one up here. And you see how tight it is? We're not much. The Australian dollar was so weak that silver barely went down. See, we don't have that huge gap. As soon as it went down, silver versus Australian dollar, because of its weakness, it didn't create this huge gap. So the breakout levels of 2016 for silver versus the Australian dollar is actually the lows, the breakdown from that top pattern. So we're right back there, very like a miniaturized version, less of a vacuum than you see on other currencies that resisted better versus silver. But we're right there, guys. We're right there. So you could take another example, how coiling, tight. And when you break out, right here, close the 12-month moving average, just explodes and distancing its way. Distance too much, pull back, and then explode for another ride up. It rinse and repeat, guys. So that's it. That's the overview of gold and silver versus all the other, 10 other fiat currency pairs. And we're approaching a good moment, right, coming up for our next leg up, at least for silver, creating a gold-silver ratio, which should keep declining following the VIX also unwinding, going down, and the DXY unwinding also at the same time. All right, guys. I thought it'd be short, but here we are. Thanks for watching. Ciao, guys.